Don't chase the money. People first, and the money will come. And I know that it's cliche, but that's the truth. And we're all faced with decisions when we get in the midst of a transaction or a deal. And if you let the money dictate how you answer a question or how you respond in a situation, I think ultimately you know how it's going to turn out.
All right. Welcome to the North Fork Experience, the podcast where we explore the journeys of exceptional individuals and businesses shaping our communities and industries. I'm your host, Kirk Hays, and today we have a seasoned real estate professional from Lancaster, Pennsylvania area. He brings a unique background, having successfully transitioned from restaurant ownership to becoming a full-time real estate agent with a specific focus on helping investors grow and manage their portfolios. Please welcome Dave Garpstas.
Thanks for having me, Kirk.
Dave, fantastic to have you. Let's dive right into your North Fork experience here. You spent over 8 years as a restaurant owner before transitioning into real estate full-time. What was the biggest lesson you learned as a restaurant owner that you now apply daily as a real estate agent?
I'm sorry, my connection broke up a little bit.
I can go over that question again for you. You spent over 8 years as a restaurant owner before transitioning into real estate full-time. What was the biggest lesson you learned as a restaurant owner that you now apply daily as a real estate agent?
Well, I think honestly, it really is that there's real estate plays in every sort of business, and the real estate play that was part of our restaurant endeavor was the thing that provided a successful exit, because every business component kind of has its own, pros and cons. But with the restaurant industry specifically, margins were collapsing and getting tighter, it felt like, by the year. And thankfully, we had the real estate to kind of leverage on for a successful exit and to make it worth our while over our time in the restaurant. And also with that is, just basic asset management, maintaining the property, all the capital expenditures needing to deploy to make improvements on it, and obviously increase the value of what was sitting there from the time we bought it till the time we exited.
Yeah, great point there. I'm sure you have a really good understanding of this, and with any real estate, if you take some good care of it and really manage what you're doing there well, you have quite a bit of equity there for, like you said, kind of having an escape when margins kind of got a little bit tighter there. So the transition from high pressure day-to-day operations of a restaurant to real estate is fascinating. How did your experience managing a business, like overseeing finances, inventory, and staff, prepare you for the complexities of real estate transactions and managing client expectations?
Well, I think at the end of the day, being in the restaurant industry, now I had the luxury of working both front of house and back of house, and it really developed my people skills, being able to read individuals, being able to connect with them more so than just on a transactional level. It was really building that rapport with individuals, not just as clients of my restaurant, but then taking that into my sales career. But ultimately, I think for me, the transition, we can overcomplicate things a lot, and the reality of it is every sort of sales position is strictly just it's a person to person contact, and being able to kind of groom those skills unknowingly as I was working in the restaurant parlayed well into being able to serve clients in the real estate game.
Yeah, another great point, and I've heard that from a few other people that I know that have worked in the restaurant industry. You just deal with so many people, and you get to see a little bit about what makes people tick, what keeps people happy, what makes people come back, and you really go a long way in developing those client relationships, whether that's what you're intended to do or not. So your specific focus at Keller Williams Elite is helping both seasoned and newer investors grow, start, or liquidate their portfolios.
Correct.
For a new investor in the Lancaster market, what is the single most important piece of advice you give them before they purchase their first property?
Get ready to be patient. The Lancaster market has continuously been on an upswing since I got into the industry. I think that goes with a number of markets, not just ours. But Lancaster had bred some unique qualities with it, not just the growth that it experienced. I mainly focused in Lancaster City and then kind of expanded outwards. But Lancaster City's growth has kind of been like the epicenter for everything. A handful of years ago, I guess it was back in 2018, we had switched our MLS systems and converted over to Bright, which put us in 500 plus markets when we were only in Lebanon and Lancaster County. That exposure kind of brought a new wave of individuals kind of having eyes on our market, and brought all kinds of outside interest in, which created a ton of competition. Guys coming from bigger, and males and females coming from larger MSAs that come in, and our real estate at the time was cheap to them compared to buying in Philly, Baltimore, DC, New York. So at the end of the day, a strong buyer in our market now is going toe to toe with somebody that's got usually a cash play, and now they're having to figure out like, how can I get creative with my offer? How can I make it more of a win-win for the seller? Because not every transaction is always who's going to pay the most amount of money. Now,
Yeah.
obviously, a good chunk of time it is,
Uh huh.
but you really had to kind of get creative, and I hate to say it, but almost create a sense of vulnerability in your investment thesis to if you wanted to get the deal awarded to you. Um, so anybody coming into our market right now, I think is like patience will I think tell a lot. And I think ultimately, if you can be patient and just put the reps in of underwriting deals and just looking at a handful of things, getting to know the market, things will improve and eventually you'll be able to secure a deal.
Yeah, we've heard some people talk about, and some of the people I've talked to here talk about the difference in, maybe being in a little bit of a smaller market like Lancaster versus Philly, and the just the amount of money that comes in from those larger investors in those larger areas, and some of the differences in pricing structure when you're in an area like Lancaster, and it's really interesting and unique to see those differences, based on different market size like that. You mentioned helping seasoned investors. When dealing with clients who are looking to liquidate or significantly grow an existing portfolio, how do you keep them engaged? And crucially, how do you clearly demonstrate the return on investment you are providing as their agent?
Well, I think being an investor myself provides a leg up, not on all the agents. We've got a handful of agents that invest as well as transact and as a sales representative. But being able to understand what an investor is looking for allows me to go in, have that conversation, not pull any punches, you know what I mean? Like just talk really black and white with the prospective client and just explain to them, what might be the challenges in marketing, where do I think we could see some strength, and ultimately it comes down to just being able to have a knowledge not just with what we're doing on a personal basis, but from the other clients that I've represented to understand, current cap rates, where we're seeing activity and all those kind of things. Every seller's expectation and, their reason for selling is always what motivates them is a little bit different. What we see a lot in our market now, at least a lot of the experience that I've had with folks individually lately is, they saw a run up in pricing. The thought of selling had been on the back of their minds for a period of time, and they're like, if I can get that price, I'd say yes,
Yeah,
so I'll sell. So right now, the kind of the struggle has been like, letting seller expectation catch up with current market. And
yeah, yeah,
so my job as an agent coming in is making sure that they understand and kind of bridge the gap between what was the market 18, 24 months ago compared to what the market is now. And really not, I think there's a handful of people that'll go out and they're ecstatic to put a sign out in front of the yard or in front of the building with already determining that they're going to sit there and, well, I'll tell them the feedback hasn't been great and we'll just slowly reduce the price. I don't play that game. For me, it's
yeah,
like,
yep,
look, here's realistically where I can think we'll let it go at. I'm happy to market it for whatever, but just here, as long as you understand having clearly defined expectations of where I think it can close, I think really has been beneficial. And then ultimately the market's going to decide, right?
yeah, yep, absolutely. Yeah, and the word there's trust for sure. I mean, your client's got to have trust in you that you've done the homework. You have some experience doing the investing there, and then also your sellers as well. That trust in you to have the experience that they know that they're when they put a property on the market, you're going to do the best you can for them to get it sold at a price that it can sell at, but also works for them and their long term goals there.
Absolutely.
So the Lancaster market, as you mentioned, has seen a lot of growth. What are some unique characteristics or trends specific to investment properties in your region that investors might not see in other major metro areas?
I don't know if there's anything necessarily unique. What I would say is what Lancaster offers is relatively unique. We have a very big city vibe and such a small footprint. I mean, in 10, maybe 15 minutes, depending on construction these days, you can be from Amish country through the city and then into Amish country again, which provides like a unique opportunity for a number of people. I can't say there's any explicitly unique with what our market has. I can say that we have a great mix of like our pricing and our rents, the rents that we're seeing are very comparable to larger city markets. I think again, we're softening a little bit, but I think in terms of what Lancaster offers is that just that geographically unique perspective that somebody doesn't necessarily have to be in the city. They can be right outside the city, and there's kind of commonality. I know in other markets, like you get your urban pricing, which is one thing, and then you get out to the suburbs and it kind of retracts a little bit until you get into like some of these other communities. And I think our county as a whole, minus like a few pockets, is relatively stable no matter where you go. And I've said it for years. Like, I don't know if there's a bad spot in Lancaster to buy.
Yep.
I really believe that and again, a lot of this came into play with switching MLS systems, but we used to have a relatively fragmented market where it was just like anywhere, hot location, hot location. And then with all the outside interest and investors coming in, kind of all those borders dropped. And now you're starting to see connectivity between all of them. They start to play off of each other. And when this one got a little hot, it just organically grew outwards. So it doesn't really probably answer your question. I don't think we're too overly unique, but I do think that, we've got a little bit of something to offer everybody. And the other thing that I've always thought valuable about the Lancaster market specifically is we're not reliant on one major industry fueling our economy. We've got a ton of privately owned businesses, a lot of old money. So, it's not this major industry that sits there and goes through an economic struggle, a bunch of layoffs, and then next thing you know, it's crickets and you don't have any bodies for your units. So I think that historically has always played well with our county. And I don't believe in the term insulation, but I believe it helps mitigate some of the risk that's involved and associated with investing.
Yeah, understandable for sure. And, a little bit about my experience. We talked a little bit off before the recording started there. I'm from Pennsylvania, and I actually worked in the oil and gas industry, and I lived up in Williamsport for a long time. And it kind of mirrors Lancaster a little bit, and that I really like that area because, it's kind of a city feel downtown where you could go out and get something nice to eat. But as soon as you get outside of the city, it's real rural and in the mountains. I like doing outdoorsy stuff. So as soon as you get outside of the city, it was nice. Now, Lancaster's not really a mountain type area like Williamsport might be, but it still has that rural feel to it. But one of the drawbacks to Williamsport there, like you mentioned, Lancaster is pretty stable. It turned into an oil field town, and once I'm sure a lot of investors had some trouble once when the oil field slowed down, and everyone headed back to Texas, and I'm sure I haven't seen it personally, but I'm sure rental rates dropped pretty significantly around the area there when that happened. So.
Sure, yeah.
It's nice that you got a more stable market there, and just makes it easier to plan long term for your investors. So you've been in the industry for nearly a decade now. What is one core philosophy or strategy that you've maintained throughout your career, from your time at Younger Realty Group to Keller Williams Elite, that you believe is a non-negotiable for client success?
Don't chase the money. People first, and the money will come. And I know that it's cliche, but that's the truth. And we're all faced with decisions when we get in the midst of a transaction or a deal. And if you let the money dictate how you answer a question or how you respond in a situation, I think ultimately you know how it's going to turn out. So I have always been focused on just making sure that I have my client's best interest at heart, even if that means, and I just give you an example. Early on in my career, I knew pretty much from day one that I was going to focus on investors. And that was just being a numbers guy, being a guy who I can get wrapped up in emotions, but I prefer not to. I can wear
Yeah.
many hats, but for me, if the numbers make sense, it's a deal. If they don't, they don't, and that's cool. But I remember specifically, I had met this couple who they were looking at their very first rental and property, and I had never met them before. We get into the building, and I had done my homework on it. Again, knowing the area, underwrote it the way that I would underwrite a deal. And we walked through, and they're like, "So what do you think? What should we offer?" And I was like, honestly, I was like, I wouldn't offer them anything. They said, "Well, what do you
Uh-huh.
mean?" And I was like, "This is why." And I showed them the numbers, and they look at me and they're like, "Well, this is terrible." I said, "Yeah." And they said, "Don't you get paid by selling real estate?" I said, "Look, what good does it do me, especially as new investors, for me to sell you a lemon of a property for your
Yeah.
first
Yep.
transaction and never invest again? Not only one, would it make me feel terrible as an individual, but two, you're never going to invest again. You're going to have such a salty taste in your mouth that you're not going to do it." So for me, it's always been, no matter the cost, client first. I mean, I know we take that in our ethics, and we understand that we've got a fiduciary responsibility to our clients, but I take that really seriously.
Yeah, and that's so important. And I'm sure that interaction that you had there really helped out yourself long term. Even like you said, you don't sell that property right away, but you potentially made a client there by being so upfront and honest with them that, they know that they have that trust in you, that you aren't going to try to put them in a bad unit just to, get a sale and make your commission. In a smaller area too, like Lancaster, that really goes a long way as far as your reputation goes.
Well,
That's
and
certainly
you
the
and
way
I
to
both
handle things.
and you and I both know standard residential transactions every 6 to 10 years. You get an investor, they'll buy 6 to 10 times a year if the numbers make
Yep.
sense. So why build a bad reputation is not an investor friendly agent. And for me, that couple in particular, they bought 3 or 4 properties through me and then ended up selling a bunch of them. So it was a great relationship for sure.
Yeah, so a bad short-term play for you, but long-term it's just the way to do business, and it helped you out significantly long-term there. So yeah, and it's great to see. So for agents who are looking to expand their business to include more investor clients, what is the best way to pivot their focus and start building credibility in that niche?
Honestly, just do the homework and just start looking at deals online and figure out, if you don't know how to underwrite, figure out what underwriting means first and foremost, and then understand that because a property is advertised as a good investment opportunity, it generally isn't. And to really just stick to your metrics and understand what it actually costs to run a property. And obviously that changes depending on what type of asset you're looking at, just to really hone in on your skills of being able to look at a deal and know whether it's going to make money or not.
Gotcha. Yeah, it's important for sure. That's that. Yeah, it's the key to the whole thing. Like you said, anything that's marketed as an investor special or whatever might not always be the best thing for an investor to jump into. So it's important to really do your due diligence there and make sure the numbers work on it too.
Absolutely.
So looking ahead, what key trends or shifts do you anticipate in the real estate industry over the next few years, particularly concerning technology or investor expectations?
Well, I have to be honest regarding technology. I mean, obviously, everything's going AI. And I think from a property management side, a lot of people are trying to leverage that to cut down on their costs and increase efficiencies. And obviously, we're going to continue to see more and more of that. I do think it's going to end up creating some hiccups and a little bit of tension in the tenant landlord relationship. And I think that the companies that kind of still do grassroots person to person conversation are going to do really well. I think trend wise, we're we're starting to see the lag effects of build, need to target class A, and now we're going to start, at least in my market, we've got an influx of really nice quality units coming online that need to hit a metric that's probably not going to be there when they're ready to go live.
Yeah,
And some of that is based on the debt they procured to do their project. Some of that is they planned not seeing what was coming, underwriting for then, not for the future. And I think we're going to start to see a lot of concessions, loss to lease, like just things that are really going to shake up our class A for a little bit until it kind of works its way through the system. I think there's going to have to be a lot of people, at least there was 2 plus 100, don't quote me on the numbers, maybe closer to 300 of approvals for new stock coming on the market that are going to be hitting the streets. If they haven't already, they're hitting within the next probably 6 to 12 months. And with all of that, some of it was affordability based, a lot of it wasn't. And I talked to one property owner who's actually in the position of trying to liquidate it, and new quality, new stock, nicely done units, maybe a little quirky in layout, but they're hovering at like 30% occupancy. And I mean, you and I both know you
yeah,
can't pay your bills at
yeah.
30%. At
That's
least
not
maybe I'm
that's
wrong.
that's not going to win. Yeah,
Yeah. So unfortunately, if you're the only guy in the game that's struggling, I think eventually it can work itself out. But now if you're that guy and then you've got all these other new units coming online, like something's going to give. And I think there's going to be a little bit of pain for a little while till we figure out how those units are going to play in our marketplace. And that might be across the board nationwide. I don't know, but I just know specifically where I'm at. That's kind of what we're seeing because it's ever since COVID, everybody thought COVID was going to break everything, and instead it just continued to double digit rent increases, and people were just panicking. They just wanted to make sure they had security,
yeah, yeah.
and we could not keep that pace of growth. And so ultimately, I think we're starting to cool back down to where the natural trajectory would have taken us had COVID not been in play. So I think we're going to go through a little bit of shakeup here in the near future.
Yeah, and you made a great point with technology there too. It's going to be a lot in how you manage it. The technology stuff's coming, whether any of us like it or not. But it's managing that technology and integrating it into the work that you're doing. But at the end of the day, real estate's a people business, and it's always going to have that personal touch to to be successful and drive you guys forward for sure. So that's definitely an interesting point. So Dave, this conversation's been incredibly insightful, showcasing your dedication, expertise, and operational excellence, especially in the investment sector. Your North Fork experience offers invaluable lessons on both entrepreneurship and real estate strategy. Thank you so much for sharing your journey with us today.
Appreciate you, Kirk. Thanks, man.
Before we wrap up, for our listeners in the Lancaster area who are looking for a knowledgeable professional to help them grow, start, or liquidate their investment portfolios, or who are inspired by your story and want to connect, what's the best way for them to reach out to you to learn more about your services at Keller Williams Elite?
Honestly, you can find probably more of like the team stuff at kochgarpstasrealestate.com or kghomegroup.com. I'm sorry. And then probably just I'm not a social media guy, so probably just find me through there, or you know that's probably the easiest way.
Yeah, perfect. Yeah. We'll make sure we include those details in the show notes. So that's all for this episode of the North Fork Experience. A huge thank you again to our incredible guest, Dave Garpstas, and thank you all for tuning in. Until next time, keep exploring, keep growing, and keep experiencing all that our communities have to offer. Thank you.
Thanks, Kirk.